Opendoor stock continues to be one of the most compelling stories in the market right now. Following the company's latest earnings release and a volatile Tuesday session, all eyes are now on how Wednesday's pre-market will set the tone for what could be another pivotal week. With strong quarterly results, a shifting macro backdrop, and heightened retail interest, we may be on the cusp of another major move. Let's start with the numbers. Opendoor reported a solid quarter, selling 4,299 homes and generating $1.6 billion in revenue, up 5% from the previous quarter. Gross profit came in at $128 million for an 8.2% margin, and contribution profit was $69 million with a 4.4% margin. Most notably, this marked the company's first quarter of adjusted EBITDA profitability in 3 years, at $23 million. On the bottom line, the net loss narrowed to $29 million, and adjusted net loss came in at just $9 million. By any reasonable measure, these are strong results, and they suggest a business that's not only stabilizing but moving towards sustainable growth. But here's the twist. Despite those numbers, the stock tanked in the after-hour session on Tuesday, falling as much as 24%. The primary catalyst? Commentary around a softer outlook for the second half of the year. Management made it clear that due to persistently high interest rates, the company expects acquisition volume to decrease, meaning fewer homes purchased and lower inventory levels. That's the reality of operating in a high-rate environment, and Opendoor is adjusting accordingly. Unfortunately, several financial media outlets latched onto that soft guidance. Sites like TipRanks, Investing.com, and MSN highlighted the tempered outlook, and it seems many traders reacted emotionally. But let's put things in context. After-hours trading is often thin, meaning price movements can be exaggerated and unrepresentative of broader market sentiment. Volume is lower, spreads are wider, and institutional players generally wait until regular hours to make their moves. So is this 24% dip a real reflection of value? I don't think so. To me, this feels like a classic knee-jerk reaction, a mechanical sell-off rather than a considered response. The fundamentals haven't changed. In fact, they've improved. And if anything, the macro environment is shaping up to give Opendoor a tailwind. Here's what I mean. Job data this week has come in weaker than expected, raising the probability that the Federal Reserve could cut interest rates as early as September. Bond markets have already started pricing this in. If a cut happens, or even if the Fed simply signals a readiness to pivot, it could breathe life into the housing market. Mortgage rates could ease, housing demand could firm up, and companies like Opendoor would be among the first to benefit. And let's play out a few scenarios. Scenario 1. Retail investors recognize that the Q2 results were solid, and that the recent macro data supports the idea of an improving housing market in the short term. This interpretation could reignite the bullish rally and accelerate a new wave of buying. Add in the elevated short interest and you've got a recipe for a potential short squeeze, a sharp, momentum-fueled rally that leaves bears scrambling. Scenario 2. The broader market leans into the negative headlines and we see continued weakness in the stock on Wednesday. That might seem bearish, but it could actually present a buying opportunity. Retail investors, particularly those watching this space closely, may take advantage of lower prices to add to their positions. If they do, we could see a rally emerge later in the week as value buyers and short covering converge. Scenario 3. The media narrative continues to dominate, and retail enthusiasm takes a backseat. In that case, the stock could remain range-bound in the short term. But even then, if we get confirmation of a rate cut or signs that housing activity is rebounding, sentiment could turn quickly. The fundamentals support a longer-term bullish thesis, and those patiently accumulating shares could be well positioned. As for me, and this is not financial advice, I'm viewing any potential dip on Wednesday as a chance to add to my position. The business has proven it can generate adjusted EBITDA profit even in a challenging environment. The management team is disciplined, the strategy is clear, and macro conditions are beginning to tilt in their favor. I think Q3 and Q4 results have a real shot at outperforming current expectations, especially if rates come down and inventory levels rebound. Let's not forget the reverse stock split vote was fully cancelled, a sign of confidence from the board and a relief for shareholders who feared dilution or volatility. Combine that with regained Nasdaq compliance and it's clear the company is entering a more stable phase. Retail sentiment is also building again. Opendoor remains one of the most discussed stocks across Reddit, StockTwits, and other retail forums. This time, though, the conversation is more balanced, not just about hype, but about earnings, cash flow, and strategy. That's a healthier dynamic, and it bodes well for more sustained investor interest. In the short term, price action will be volatile. We could see big swings, especially with earnings season still in full swing and macro headlines driving sentiment. But over the medium term, Opendoor is positioning itself to thrive. The fact that they achieved positive EBITDA with reduced volume is a massive green flag. When the housing market turns, and it eventually will, Opendoor will be ready. So as we head into Wednesday's pre-market, here's the big picture. Earnings were solid. The after-hours sell-off may be overdone. The outlook is cautious, but understandable given current rates. And the Fed might be just weeks away from delivering the rate cut that could reignite housing activity. The pieces are in place. Now we wait to see how the market responds. Whether the next move is another leg higher or a short-term dip, the long-term case for Opendoor remains intact and increasingly compelling. Thanks for watching. Drop a comment if you're adding to your position, sitting on the sidelines, or still watching from afar. Don't forget to like, subscribe, and hit the bell so you don't miss the next update. We'll be following this story closely.